one of the most common questions I get in our EM community, as well as from other people that I know. Paul, should I wait and hold off buying a home because interest rates are skyrocketing and I want to see if real estate crashes? So first off, everything I'm going to say here, nothing is an actual prediction of what's going to happen in the future. If anybody out there is trying to say this is what's going to happen, they are guessing. And if they guess right, congratulations, they got it right. But it's mostly because of luck. What I try to do is look at evidence. Now, I've said in many videos before, I'm not 100% convinced that home prices will slow down. And here's why. The big caveat is inflation. Inflation is real estate's best friend. Why is that? Well, think about it this way. Inflation is the cost of labor, goods, everything going up. As inflation is higher, people need to make more money in order to pay for goods. As they make more money, the costs of goods go up. It's a cycle that keeps on going. That's what inflation is. So if you have a home, hypothetically, you own a home in a neighborhood, and the average home is $300,000. The person buys the land, a developer buys the land behind you and mimics your neighborhood exactly. But now those new homes, because of all the costs, are $500,000. Exact same homes. Is your house really $300,000? No, of course not. Now we'll go to $500,000? No, because it's not new, might need to be updated, but it's going to be at least $400,000 or $450,000 because somebody else will sit there and say, you know what? I'm willing to save $100,000 and put $50,000 into this house. I'll buy the guy next door. That's the key about inflation. So the next question is, have we ever seen this happen before? Our average viewer right now is not old enough to remember the past. And guess what? When I'm starting this data here, I wasn't even around, but I'm a student of history. I like learning about it. In the late 70s and early 80s, we fought major stagflation. What is stagflation? Stagnant economic growth with inflation. We had big time inflation. In fact, at one point, the 10-year treasury in the US hit 18%. Guys, we were recently as low as 1.2% on our 10-year treasury. That's 15 times higher. That's a big number. So in the last year, what has happened to 30-year home mortgage rates? They went from an average of 2.7% to 5.7%. That's a big jump. And so, of course, I believe that there will be a slowdown in the demand for homes or in the homes that people are buying. Does that mean prices will go down? Not necessarily. Now, I'm not saying that prices will definitely go up, but here's an interesting fact. In 1975, the average home price in the U.S. was $38,100. Actually, the median home price. That means half the homes in the U.S. sold for below this, half above this. In 1985, oh, and by the way, the interest rate back then was 9%, 9.5% on a 30-year fixed mortgage. It's pretty high. In 1985, the average home price, the median home price was $82,100. Okay? Look at that big jump, over double. Guess where the average 30-year mortgage was? 13.1%. Much higher. 50% higher, guys. 50% higher, and still home prices went up. What was the key? Here's the key. The CPI index, which is the Consumer Price Index, in 1975 was 51. In 1985, it was 106. That's over double in 10 years, which is over 7% inflation per year for 10 years. That's what drove prices. As people's costs go up, their incomes go up, and even with increasing interest rates of 50% from 9 to 13, it still allowed for home prices to increase over double in those 10 years. And guess what? CPI over doubled, home prices over doubled. This is what drives real estate prices. Income and inflation, because inflation drives income. This is what I want everybody to understand. It's not so simple as a one domino effect. There are multiple effects. However, the big driver of real estate prices will be inflation, and that'll drive incomes higher, which will drive home prices higher. Think about it again this way. If today you're making $100,000 a year, and 10 years from now you're making $200,000 a year, are you paying the same amount of money for a home today as you are 10 years from now? Of course not. So if everybody's incomes are rising, what's happening to all home prices? They're all going to go up. The devaluation of the dollar, which is inflation, is going to cause home prices to go up. That's exactly what happens here because it causes incomes to go up, which therefore causes home prices to go up. So I don't want you to be stuck in these one-dimensional thought processes. And I'm not saying this is going to happen again. However, this is a pretty scary time back then. People were scared of oil prices. People were scared of inflation. Sound familiar? Does that sound familiar today, guys? That's the point. And we're not growing really fast as an economy. The concern is stagflation. And yes, inflation is 9%, which is a lot, and it sucks. But if you can ride it out, if you've done a great job saving your money, living well below your means, you will come out ahead. If you just bought a home recently, even if this doesn't happen, as long as you bought a home you can afford and still manage to save and live well within your means, you will be fine. This weekend, a good friend of mine in Atlanta called me up and said, Paul, I need advice on a property I bought, a house I bought that we now rent out. I'm wondering if I should sell it. And we started going through the numbers. And I said to him, here's the deal. I'll call him Tom. I'll say, Tom, here's the deal. Let me ask you a question. How much did you put down on this house? He told me 20%. I said, great. What do you think the chances 30 years from now this house is worth exactly what it's worth today? Keep in mind, he's cash flowing $2,000 a month on a house that his mortgage payment is $1,800 a month. So he's getting over $3,800 a month on all of expenses are $1,800 a month. He's getting over $3,800 a month in rent. I said, let's say your house was worth exactly what you paid for it 30 years from now, and you paid down all the debt and it was worth zero. Would that be worth it? Well, of course, we did the numbers. It was like a 20% return or 15% return. I said, great. What if it's worth half and you still pay it all the way down and you collected the cash along the way? It was still like a 15 or some obscene return. I said, are you happy with that? He goes, yeah, I never thought of it that way. That's the way to look at it. You can still make money when things are bad. This was scary. This was scary. This kind of relieving. And that's the key we want you to understand in this channel. If you're new to this channel, I'm Paul, and I try to teach a way of looking at money and investing different than everybody else, because that's the real way you're going to make money, by thinking about people, thinking about investments in different ways than everybody else. It's easier to say, harder to do. But this is why we have our community of investors. We have a website called everythingmoney.com. I call out financial scam artists on YouTube, but we have this big community right here. And this community is where thousands and thousands of people, over 13,000 people sign up for this, and thousands are active every single day talking about these kind of ideas. Because it's very lonely out there to think different. So if you're by yourself thinking different, I can understand why you might succumb to the media and other pressures of people around you. This community, though, everybody's in there talking exactly the way I'm talking. They're talking in a way of thinking different from investors, because the way you do better is you think different from everybody else. You think to yourself, everybody wants this, so it must be overpriced. I'm going to avoid that. Nobody wants this. It might be an opportunity to buy because nobody else wants it and the price gets depressed. Your job as an investor is to find mispricing of value. That's the key. And when it comes to real estate right now, even though real estate was very hyped in the last 10 years, especially the last 5 years, I'm not thoroughly convinced that it's going to crash or even go down. Could it? Absolutely. But I'm not as convinced. As long as inflation stays up, that will be the thing that keeps real estate prices up. Thank you very much for your time. Please don't forget, subscribe to this channel if you liked what I did. And also look at our next video. The upcoming recession could be the opportunity of a lifetime for you.